thank you guys so much for tuning into today's live stream. Today is February 26th, 2025, and to begin today's live stream, I do want to take a look at the economic calendar here for today. So today we do not have any red voter news, meaning we don't have much volatility that's going to be present in the markets today. And to be honest, coming into today, I don't really have much of a bias. So based on the way that we created yesterday's candle, right? If you guys take a look at this candle here, it's a down close candle, right? And we created this daily fair value gap, and with the way that we closed below this candle's low here, right? This candle's low is right here, and yesterday we closed here. So because we closed below that blue line, I would treat this daily fair value gap as a breakaway gap, meaning I don't want to see prices trade up into this inefficiency. So today we could either take out previous day low or consolidate. I'm not anticipating for us to take out previous day high today. And on the weekly time frame here as well, we have completed the weekly objective. So here, this is the weekly candle here from previous week, and notice how this weekly candle here, previous weekly candle, had a pretty bearish closure, right? You can anticipate that the weekly low is going to be taken, and that the next weekly candle should be a open high. So make this visually see. So you guys have to open high, low, and then close. That's what I was anticipating coming to this week, and you guys would have seen that on my weekly market outlook as well. So the technicals here were telling us that we're probably going to continue lower here. And we do have, we are about to close here on the monthly candle here in about 4 days or so. So if you apply that concept, right, the TGIF setup on the monthly time frame, you can kind of foresee where prices wants to close, right? So, whoops, and in this case, it should be so for here it should be at this monthly high, and I don't know if yesterday's low is the low of the month, but if it is, then we can anticipate for prices to kind of consolidate here within this blue shaded area for the closure of the monthly candle, right? But we still have 4 days left, and we also have NVIDIA earnings here coming in later today. So, I mean, I don't want to say anything yet, because NVIDIA earnings could reverse this entire move down, or it could push us lower. But yeah, as of right now, like I said, for today, I would like to see either previous day low get taken, or we consolidate and we treat this daily fair value gap right here as a breakaway gap. And so far this week has been pretty clean. We had this weekly a weekly model here that played out, and I vaguely went over it with you guys here on Monday. But to go over what I meant by to go over what that weekly trade was, or I guess one of the trades here for last week, or this week, I mean, it was based on the daily time frame, if my higher time frame candles is going to load here. But from this swing low here, right? This is a daily swing low, by the way. This is a daily swing low, and this is a daily swing high. So from a daily swing low and a daily swing high, there is a dealing range that gets created, and within that dealing range there is equilibrium, premium, and discount. So equilibrium is essentially the midway point of the dealing range, right? Which is going to be denoted by that 0.5 level right here. This 0.5 level, and equilibrium separates discount and premium. So this would be considered discount right here, and this would be considered premium. And if we are thinking this in terms of like a regular market, right? Not the stock market, not anything. A regular market. In a regular market, sellers, they're going to want to sell in premium. And buyers, they're going to want to buy in discount. And in the case of the smart stock market here, right? If this is a dealing range, the buyers are going to want to buy within this area, within the discount, right? Within that green shaded box, right? It makes sense for prices to want to buy at a lower price. So if there are buyers, they're going to want to buy here. And if we can apply that concept, we can essentially short, we can sell into discount, right? Because a tendency in prices that they're going to want to buy in discount, right? So if we can kind of reverse that psychology, because we know prices likes to trade into discount, we can actually use that as a target. So my higher time frame objective here for this specific trade would be for us to trade into the discount of this dealing range, of this daily dealing range, right? So that's the higher time frame objective. And why do I have that higher time frame objective? Well, this daily candle, last week on Friday, we had a pretty bearish closure, right, on Friday last week. And we also had a pretty bearish weekly candle. And notice how the weekly candle's low and the daily candle's low are the exact same lows. So Friday of last week's low was at 21,652. The weekly low was at 21,652. So they have the exact same lows. And because they have the exact same lows, I can anticipate for prices to complete the weekly objective within the next day. And that idea is called scope. I can get more into that, but to continue with the trade breakdown here, now that I have a higher time frame objective, right, and I have a model, and my model here is based on this daily candle and this weekly candle, and more specifically, like I said, I should use the daily candle because the daily candle's low is the same low as the weekly candle. So going from the daily model, I have to go on to possibly the 4-hour time frame, the 6-hour time frame, the 8-hour time frame, or the 10-hour time frame for some sort of entry pattern, right? So going into the 4-hour time frame here, I notice, hey, we have this large fair value gap, right? That gets created within the time frame of this daily candle. So this daily candle here had 24 hours to create that candle, right? So, and within that 24-hour time frame, we created a fair value gap. We created displacement. And so whenever prices trades up into this inefficiency, I will take my order, I would take the trade, and then I'm going to target previous week's low, which is previous day low, and I'm also targeting a retracement back into the discount of the higher time frame dealing range, which is the daily dealing range here. So, I mean, you guys have seen what happened. We traded back into discount, and we just continued to sell off. This ideal setup, very, very, very clean. I mean, everything that I'm looking for was there, right? And one thing that I didn't really mention to you guys too is that we didn't have any SMTs. So with ES and NQ, there was no SMTs here at this low, at this low, at this low, or this low. Because of the lack of SMT, I was more confident that we were going to seek lower prices, right? If we had SMT, then it would have been like, okay, this swing low could turn out to be a strong swing low. But because of the lack of SMT, I can actually anticipate for a continuation lower. Because a strong swing low, right, like this swing low right here, would always be accompanied with SMT. So like in this case, there's SMT at there's SMT with ES, meaning ES probably took out this swing low and then continued higher, right? So that could have played out on ES, and then NQ failed to take out this swing low here. So that's like another confluence here for this trade as well. So there's a lot of components here, right? Higher time frame objective. I have a model, fair value gap. I even use SMT as a as a confluence, or not SMT as a confluence, but the lack of SMT as as confluence. But yeah, going into today, like I said, I don't really have a objective. The 2-day time frame is about to close here. Let's see. Yeah, 2 days about to close. So we'll see. We'll see how we close here on this 4-hour candle, right? So because I don't really have, like I said, I don't really have a bias here on the daily time frame. I'm going to elect to use, if it would load for me here, I would elect to use the 4-hour time frame and the 8-hour time frame as some sort of higher time frame bias, right? So every candle has an objective. And let me go back just a little bit here. So notice how I showed you guys that dealing range here on the daily time frame. Well, there's dealing ranges on every single time frame, right? If I were to go onto the 15-minute time frame here, this retracement back inside the range, look what we did. We traded back into the premium of this 15-minute time frame dealing range. And so there are dealing ranges on every single time frame, even on this time frame, even on this dealing range here. So this could be seen as a little micro 15-minute range, but more specifically could have been a 5-minute dealing range. Here, look, there could have been a model here as well for us to trade back into this premium of the dealing range. So dealing ranges are fractal, right? Prices is fractal. Everything that I'm kind of going over here with you guys is fractal. So the whole power of 3 concept can be applied to the 4-hour candle and the 8-hour candle, which is what I'm going over right now. So this 4-hour candle and this 8-hour candle, we're about to close on those two time frame, or those two candles here in about 15 minutes or so. And once we close on those two time frames, there's going to be an objective, right? There's going to be a reason for prices to continue in a certain direction. And if we were to close right now on this 4-hour candle and this 8-hour candle, the easiest assumption for me to make is that we're most likely going to take out the 4-hour low and the 8-hour low if we were to close right now. But like I said, we still have 15 minutes, so I'm going to wait. And one thing that I do want to go over here with you guys as well is that there's a dealing range. Like I said, there's a daily dealing range, there's a 4-hour dealing range. If we create a bearish 4-hour candle and a bearish 8-hour candle, and we haven't retraced back into the discount of this specific dealing range, then I'll consider taking a model, right? But yeah, like I said, dealing ranges are fractal. It's happening all the time, and it just depends on how you are able to align yourself and kind of see that. But yeah, like I said, I'm gonna wait until we close here on the 4-hour time frame, 8-hour time frame as an objective. I did take a trade yesterday. It was a very quick and easy trade here. So for yesterday, we actually took this trade here. So for yesterday's trade, let me see if I can go over with you guys and show you guys what I took. So let's take a look at this hourly candle from yesterday, right? This hourly candle here, I can anticipate for this hourly candle, or I can anticipate for the next hourly candle to take out this specific hourly candle's low. Because of the way that we created this day or this hourly candle, right? It's a pretty bearish hourly candle. It's telling me that we're going to take out the hourly low here with the next hourly candle, and the next hourly candle is this one. So for me, I have a pretty bearish bias here for the next hour, just simply based off of this hourly candle, right? So for me, I'm just trying to align myself. I'm trying to wait for a model that would align myself with this higher time frame objective. And my model here is actually based off of this 15-minute candle and this 30-minute candle. So notice how the 30-minute candle and the 15-minute candle are both suggesting to me lower prices, right? They are suggesting to me that we're most likely going to take out the 30-minute low, which is the exact same low as the 15-minute low. And what concept is that? It's scope. So that means in scope, like I said, it allows me to understand when we should complete an objective, right? Because the 15-minute low is the same low as the 30-minute low, I can anticipate for this 30-minute candle's objective to be completed within the next 15 minutes. So now that I have a model and I know what the higher time frame order flow is, right? And like I said, higher time frame order flow is bearish. I want to see the hourly low get taken. My model, which is the 15-minute time frame / 30-minute time frame, is also suggesting lower prices. So now I'm going on to the 5-minute time frame, the 4, the 3, the 2, the 1-minute time frame, based off of this model, the 15-minute model. So I'm pretty sure, yeah, I took the entry based off of a 2-minute fair value gap, and I'm going to denote this here as 1 hour low, and I'll put a little plus sign next to it. And then this is the 15-minute low, 15/30M low, and I'll put a little plus sign to it too. So notice how these two lows here, right, on the 15-minute time frame and the hourly time frame, notice how those two lows are completely different. The way that I'm interpreting this is that we are going to trade up into this inefficiency here on the 2-minute time frame. Trade up into this inefficiency, respect it, take out the 15-minute low, which is my model's objective, and then after taking out this 15-minute low, we should continue to expand lower, because the hourly time frame is telling us that we're going to possibly have a continuation or an expansion lower after completing the 15-minute objective. So here on the 1-minute time frame, oh whoops, not the 1 month time frame, On the 1 minute time frame, we trade up into the inefficiency here. As you guys can see, we trade up into that 2 minute fair value gap. We take out the 15-minute low. We take out the hourly low. And after completing those two objectives, I actually moved my stops to break even, and I let prices do its thing. And we ended up catching the low of the day there. So here yesterday, very, very clean setup, right? I mean, it had everything that I'm looking for. Very, very clean. But yeah, coming into the morning of today, like I said, I'm gonna wait until we close here on the 4-hour time frame and the 8-hour time frame for some sort of buys. But yeah, as of right now, we're just gonna wait and sit on my hands. No need to really force anything here. So I don't think we traded back into the discount of this daily range. Yeah, we didn't. But notice how there wasn't any bearish candles that suggested that. I have to see a bearish 4-hour candle for me to be confident in the idea of us shorting into the discount of that specific daily range. And because of the way that we're creating this 4-hour candle, I can't really suggest, or I can't really anticipate the idea that we're going to continue lower. Let's take a look at ES. So ES has taken out this respective high. So there's a little bit of an SMT right now between NQ and ES. Just be patient and wait. And I apologize for not being able to live stream yesterday. I don't know why, but we had some technical difficulties, and which caused me to actually upload a video yesterday. So instead of doing a live stream, I actually uploaded a video. And hopefully it's growing. So we have 15 views. This one we have 2.2, which is really good. But yeah, hopefully these live streams start to catch some traction and we attract some new people. But yeah, I mean, we still have a lot of time left until we have this closure here on the 4-hour time frame and the 8-hour time frame. But hopefully, you know, everything goes well and we're able to see some decent price action. Let's check what's going on the Wall Street Journal here. And I've actually been reading the Wall Street Journal a little bit more now, at least 3 articles a day. So I'm just trying to keep up with what's going on here. So we have Supreme Court reverse bias lawsuits amid, let's see, Trump airport. NASDAQ rises ahead of NVIDIA earnings. I don't see us rising, actually. I don't. I mean, like I said, technical wise, I can't see a reason why I want to see higher prices. But I mean, the Wall Street Journal here is telling us otherwise. The note of optimism is emerging throughout following a rough stretch on the Wall Street. Stocks opened modestly higher after economic worries and tariff fears weighed on markets again Tuesday. Nvidia's earnings are due after the close. Its share rallied in early trading after dropping yesterday as part of broader tech sell-off. The AI chip makers' results have become a major market event, with Nvidia's stock moving 6% or more the day after reporting in the 3 of the last 4 quarters. Given Nvidia's size, many investors expect Wednesday's report could make or break the recent stock market swoon. Investors expect to see a big growth in Nvidia's revenue and earnings, but will also look for any commentary about competition and politics. Nvidia's chips have been embroiled in the United States/China standoff, while its stock has been rattled by the emergence of Chinese AI startup DeepSeek. Meantime, copper prices rose after President Trump instructed the Commerce Department to investigate imposing tariffs on imports of the metal. Shares of mining companies such as Freeport McMoran climbed in early trading. In recent trading, U.S. stocks rose modestly. I can't see how they're saying that we're rising here. Like, technical wise, it's telling me that we're going to see a bearish. If we close right now in the weekly candle, it's telling me that we're most likely going to continue bearish. But I mean, I don't know. Who knows? Maybe Nvidia earnings actually take us up and have a reverse in the way that we created this weekly candle. The 10-year Treasury yield held below 4%, 4.3%, having slid Tuesday to settle at 4.297%. Oil prices fell, pressured by concerns about economic growth and the possibility of a Russia-Ukraine peace deal. So, Bitcoin prices flew to around 86,000 on Tuesday, suffered its biggest one-day percentage drop in nearly 7 months. So let's check out Bitcoin. Can I check that out? Crypto, I just want to see Bitcoin. Wow. Let's see. Okay, us retracing back into this 1 month. Oh wow, wait, hold on. This could be a market structure shift. So this is the yearly high. We take out the yearly high here. So we trade back into this 1 month fair value gap. We take out the yearly high, and then now we broke past that low. This could turn into this could indicate a whatchamacallit, a reversal. But the thing with Bitcoin is that, oh wow, wait, hold on. It has a lot of these pull. So this is 20. Oh my gosh! Wow, this is kind of interesting. Taking a look at the yearly candles here, like it just so like if I were to see these and I traded like power of 3 with the way that I see prices. These are opportunities. I only see these as opportunities, right? with the way that we close here on this yearly candle, right here, if my thing allows it, this yearly candle right here, I would anticipate for this yearly candle's high to be taken on Bitcoin. Like, just simply based off of, like, just taking a look at it, right? I can anticipate for this yearly high to be taken. And with that in mind, I would actually try to find, like, an entry pattern to target that high. So I notice, okay, the 6-month high here, the 6-month high is actually the same high as the yearly high. So scope, the idea of scope, right? So let's go on to the 3-month time frame. Okay, well, the 3-month candle here, this candle right here is suggesting to me, hey, we're scoping into it, right? So this green line, keep in mind that this is the yearly high, by the way. It's the 6-month time frame and the 3-month time frame. Both of those highs on their time frame is the exact same high as the yearly high. So that means I can anticipate for us to complete the yearly objective within the next 3 months. The 2-month time frame. Same thing here as well. So now it will continue to scope and scope, right? Okay, so now this is where we kind of get a little of a divergence. Not a divergence, but a whatchamacallit, I guess now that scope has ended, right? So this 1-month high here this monthly candle here isn't necessarily suggesting higher prices, this monthly candle, but suggesting to me that we're most likely going to retrace back into this inefficiency right here. So whenever we retrace back into this inefficiency, we should respect this inefficiency here, right? And we should expand higher. That would have been an entry, right, for this Bitcoin here. And let's see what happens. So we trade. Okay, we just traded into that inefficiency there, right, on the monthly time frame. And then what do? We take out the yearly high. That's a model. And I don't know how much, I don't really trade Bitcoin, but that could have been a almost 17,000 point move, or basically 18,000 actually point move. That's pretty good. I would think so. But now that we're breaking past that swing low right here, and this is the swing low that got traded into the inefficiency to continue higher, right? Now that we're breaking this swing low, this could be seen as a market structure shift. But like I said, I'm not completely I don't trade Bitcoin, so I don't really know for sure. But let's pull up the discount level, and so why does my thing look so skewed? This doesn't look correct at all. What? Hold on. Give me 1 second. So my high is 109,396.43. My low here is 49,111.87 divided by 2. So my equilibrium should be at 79. Okay, that makes sense, but it I don't know why it looks like this box is... Okay, am I visually seeing things wrong? Okay, why is equilibrium... That's so weird. That's so weird. Shouldn't it equilibrium be the same? Well, okay, well, whatever. Well, I want to see prices trade. If we get a... if we can get like a bearish kind of like setup here, then I could anticipate for Bitcoin to at least trade back into this inefficiency. Or not trade down into the inefficiency, but trade into the discount of that dealing range on Bitcoin. But I don't trade Bitcoin. That just goes back to Albert. Oh, that's interesting. Okay. So going back to NQ here, let's see, how do we create the 4-hour candle here on NQ? So 8-hour candle, 4-hour candle here on NQ, not suggesting bullish or not suggesting bearish price action at all. Actually, it's actually suggesting bullish price action. So here, I don't want to really confirm a bias, but like this 4-hour candle and this 8-hour candle are pretty, like I can anticipate the high to be taken. So that's a confluence. Here on the hourly time frame, the idea for this hourly time frame was that we're going to take out, or the objective here on the hourly time frame was for us to take out the hourly high. And let's see what happened on the 15-minute time frame. So the hourly high was the same high as the 15-minute high. And so that means, what is that idea? Scope. That means we should complete the hourly objective within the next 15 minutes. So going from the 15-minute time frame onto the 1-minute time frame, we opened up here at 10. We traded below the monthly open. We took out the hourly / 15-minute high, and then yeah, now we're just doing something. I mean, we don't really have much displacement, right? Like 5-minute time frame, no displacement at all. Not really clear what prices wants to do. But yeah, I mean, that's kind of all I have for today, at least on the charts. I'll go over the trading checklist here with you guys, and afterwards I'm going to call it a day. Ooh, hopefully you guys got some knowledge from that little tangent. So coming to this week, or I guess let's wait, this should have been 17 to 21. So from the week of February 17th till February 21st, these are the things that I should continue to do, and these are some of the things I can work on. So for the 3 things that I can continue to do is taking consistent models. So for every single trade that I just went over with you guys in today's live stream, I was able to identify a higher time frame objective. I was able to identify a model, and I was able to explain to you guys what the entry pattern was, right? Taking those consistent trades is like what really matters to me, right? Bên dưới con gì? Nó dừng hả? Chứ còn gì nữa? Nó không có dừng hay vậy. Nó sợ nó quýnh vào last này. Lấy quần áo bớt em thấy cái chậu nó xài một cái bền thôi, chứ đừng có lấy bỏ hết quần áo ra giặt là chỉ giặt một cái bền thôi. so like I said, taking those consistent trades and having those three components present in every single one of my trades is what's really going to benefit me as a trader, right? It's not about winning. It's not about taking winning trades or losing trades. It's about taking those consistent trades and having the discipline to follow my strategy. Second, to be patient. Sometimes in the markets, there are going to be periods where you're just going to have to sit on your hands, right? You're not going to, there's not going to be a trade that's going to be present in maybe a day, 2 days, 3 days, even weeks. During those times, those are like the times where you're going to have to fortify your mind. And human instinct, it just tells us that we have to do something, right? We have to chase something. And as a trader, you have to think opposite here. You cannot force anything to happen, or you cannot force a trade to happen if your strategy isn't present, right? And that's just something that, like I said, like today, I didn't see anything that I was keen of. I didn't see anything that I wanted to see, and so I didn't force anything. Strategy didn't even. There was nothing for me to take apart. Nothing for me to take a trade of. No reason for me to take a trade. So there's, just having that discipline to sit on your hands. And third, I mean, this is more something that I can do, this is something that I've been doing always, streaming every day. Well, yesterday we had technical issues, so I couldn't stream. But yeah, reading the Wall Street Journal, and so some things that I can continue to work on. So there was a trade last week where I had a higher time frame objective. I had a model, and it's easier to explain it if you guys could visually see it, but just know that there was a fair value gap, but the fair value gap was created in the past. So if I were to take, yeah, huh?
nhà nó kêu có giật cái máy nó phải tắt đi chứ không là nó mà một cái hết được rồi.
Sorry about that. We had some technical difficulties just now, but I don't know where I was at, but I think it was at the models. So what I'm trying to explain here by my fair value gap has to be created within my model, right? So if I were to take a trade here, that's just hypothetical. If I were to take a trade here, right? The fair value gap that I'm going to have to take has to be created within this box. Right? This is my model. My model is based off of this 15-minute candle. And this 15-minute candle, this is all of the candles that has been created within this 15-minute candle right here. This red box. So if my fair value gap is somewhere in somewhere here, right? Let's just say it's somewhere there. I cannot use this fair value gap that's on this side to take a trade on this side. So these are past fair value gaps. My fair value gap has to be created within the time frame of my model. And my model, like I said, it's in the 15-minute time frame. So I have to use within these 15-minute candles, was there a fair value gap that got created? And that's the question I have to ask myself. So with that, I mean, basically wraps up for everything here. What can I continue to work on going into this week? Taking those consistent models, having a higher time frame objective, having a model, and having an entry pattern for every single trade that I take. Understanding that you don't have to force a trade there's no need for you to force a trade. If your strategy isn't there, if the conditions in the markets don't align with your strategy, then sit on your hands. Simple as that. Fair value gap must be created within your model, which is kind of what I just went over here with you guys, and aggressive trades. And with that, that's going to wrap it up for today's live stream. Thank you guys so much for tuning in.